Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon's got a couple great offers for the loyal listeners of the Moving Iron Podcast. If you want a free baseball cap, send an email to marketing at axontire.com and they'll send that over to you. And if you want to get $50 off of your registration for the Moving Iron Summit coming up, the good people over at Axon are going to throw that in the mix. So check that out at Moving Iron Podcast, MovingIronPodcast.com, and I will get you signed up on the list. Valley Transportation has been hauling ag and construction equipment across the country for 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. Finally, this podcast is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create a connected customer experience and transform how you work today. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning?
I'm doing pretty good.
Is there a lot of snowdrifts down there in Florida this morning?
Yes, on my screen there is.
Is there?
Yes.
Okay, good.
Yeah, I see a whole bunch of snowdrifts on my screen. Yeah.
There's you weren't kidding about a cold front coming through. It's cold and snowing.
Yeah. Yeah. No, it's a real time winter time right now for sure.
Yeah.
It's serious. It's been a while since we've had a December,
Yeah.
We've had a lot of Januaries and Februaries and Marches, but Decembers for whatever reason have been on a little bit on the more mild side, and this one's delivering a pretty good punch.
Yep.
So
sound like the same storm that went through my area is making its way east to have a nor'easterish type of effect up there. I did a recorder with Rich Posson yesterday, and he was talking about 5 to 10 inches up there in the part of New York that he's in. So,
yep, they're going to get some decent snowfall in the Northeast, and where I'm going in West Virginia, we're supposed to get a foot of snow there. So definitely a wide-ranging weather pattern right now. So
when you go to West Virginia and you're gonna get a foot of snow, don't wear your flip flops. You want to wear like lace up boots. Okay, so I don't know if they
I was gonna wear my hush puppies instead. So
there you go. All right. Well,
the secret is out.
a lot of stuff going on this week or today. We've talked about wheat here last week. We talked about the cold winter kill coming through next week, what that might look like and how it's going to affect the wheat market. You got Argentina cutting their wheat crop estimates again. Every time they put a report out, they cut that, it seems like. And then you're looking at the EU. They're starting to see some bigger crops on the horizon than what they thought they were going to have last year. So I guess let's start with that first, Shawn. Looking at the wheat market, what you see happening there, are you still in the same camp that you were when we talked last time?
Yeah, we have a major winter kill event next week in the U.S. I think we're going to get one in Russia, Ukraine at the turn of the year. And then we may have more after that. Like I said, we're going to have a pretty potent, short, cold winter. So that's on the table. I don't think the current complacency towards geopolitics for wheat is sustainable. I think we're going to ratchet it up again as we get into January. And when I even look at the exports coming out of Russia, despite the fact they have large supplies, they're not able to get it out due to their infrastructure issues. So, then like I said, you look at all the tightness in the market, and I just think that we're mispriced here, Casey. This, as I said to you last time, $14 was probably clearly overshooting it to the top side, but I also think, low to mid sevens here on Chicago wheat here, SRW is just too low, and we need to recalibrate higher to better reflect the true fundamentals and the risks to production that's still going forward. Remember, everything's in dormancy, and with there still could be tremendous fireworks once we come out of dormancy, depending on how weather plays out in the different regions. So with all that on the table, I just think the odds and the probabilities are favoring upside price risks right now. And if I was a buyer, I'm a physical buyer of wheat, I sure would be trying to protect my 3-month, 4-month, 5-month price outlook, just in case we catch some significant spike trades here on a combination of weather issues and maybe some escalating geopolitics. Our smart money algorithm is really positive right now. Our technicals are turning positive right now. We just think wheat is not is a market one wants to be protecting to the upside. We really feel strongly about that right now. So
right on. Okay. All right. Let's talk about crush, soybean crush. Not too long ago, they were concerned at all-time record low soybean crushes. I don't know if that actually ever happened, but it seems like about every 3 months they put out a new record. They're expecting here November's crush rate to have been an all-time record when you're looking at there. So if you look at soybean crush rates, you look at this thirst for biodiesel and what that looks like and how that's all playing into the fact. What's your thoughts there, and how do you think that's affecting what we see happening in the soybean market? Because here lately, there's been a lot of volatility in the soybean market. There's been massive, intraday runs, and you'll see it'll finish up 10, 15 cents and down 25 cents the next day. So a lot of volatility in that marketplace.
The problem is, in the short run, we're trying to determine how bad is the Argentine situation relative to how good is the Brazilian situation. Our overall view is the Brazil situation is so good and will stay so good that it'll eventually win out and cause soybeans to sell off. The problem is all these crushing plants are coming online between now and, let's say, the first half of 2024, and the demand for soybeans domestically here in the U.S. to crush soybeans for bean oil for renewable diesel is out of sight. In fact, if every crushing operation that's either being built, going to be built, or is soon to be operating, all are finish off what they're doing, we need to plant something like 100 to 110 million acres of soybeans in order to provide the demand or the supply for the demand that would be there for all these new crushing plants. I don't know how we do that. How do we get 20 million more acres of soybeans? Who do we pull that from? I don't, that's the big issue is, I'm not sure how that works, but that would seem to me to be quite a bullish scenario in the back half of 23 into 2024, because those numbers simply do not work. If you're stealing them from corn, then corn takes off. If you're stealing them from from wheat, then wheat doesn't work. I mean, if you're stealing them from cotton, then it's like there's not enough acres to go around to make this soybean, bean oil, renewable diesel thing work. So that's lurking out there in the back half of 23 and 24. And of course, if we then parlay that into some kind of a 1 in 100 year Gleisberg cycle, drought cycle, you have yourself potentially a chaotic market situation. And so I think the market I'm not the only one that knows this is happening, Casey. It's just, I think everyone has a hard time calibrating that very bullish demand side picture out there later on in the year to what could potentially be a significant short-term oversupply out of Brazil. And I think that's what's causing this bifurcated indecision in the soybean market overall. So,
okay, that is I never thought of it like that, because that's a good point. I mean, you want biodiesel and you want ethanol and all these other things. Demand for all that is, we already have all the acres we can plant anyway. So you can't rob Peter to pay Paul, because it just throws everything out of whack.
I just don't know. I don't know. Because it's all but the government, the Inflation Reduction Bill just poured tons of money at this, and I just don't know if they really thought this through. The people building these crushing plants, boy, I sure hope they know what they're doing. I sure hope they get their supplies locked in well in advance before they open, because I don't know. I just don't know how this is going to work. It'll be very interesting, but either way, there's going to be tremendous pressure to increase soybean acres, and that will be an interesting interplay to see how that would work at a time when we don't, where other markets can, maybe the corn market can give up some if we have a big crop this year, but I don't think we can give up, 10, 15 million acres without getting into trouble immediately the following year. So something has to give, but I certainly would view any major break here, as we've talked about before, any major break in the grain markets here into the spring, on big Brazilian production, on early spring, better weather coming, big potential, all that bearishness that might come into the grain markets. I'd certainly, that would be what this whole renewable diesel push, and the need for more soybean acres was one of the reasons I certainly would want to be a strong cash buyer of these markets, especially from the livestock sector. On top of the fact that I think we're going to be going into a historic drought period in 24-25. So for now, I'm still feeling the bearish side has the advantage, but not for very long. So,
all right, let's talk a little bit over the protein markets here. What you see happening there? Cattle market still bouncing around all over the place. We're seeing some higher numbers out there, but like you've indicated, you feel like going into the first and second quarter of 23, start seeing a few of those numbers start to slip a little bit. So give me your thoughts on the cattle market right now.
I really haven't changed my view, and I'm not going to change my view. I'm worried about a major air pocket in the demand for meat protein overall, whether it's pork, chicken, or beef. I think the first quarter is going to be very ugly on the demand side. And even though we know the animals are low, I don't think they're going to be low enough to offset that. I think we need to get into the second quarter onward to where the animals that are available to come to the market, the herd rebuilding cycle that will be kicking in, will be extreme enough that it'll override. And I think that, if we have trough demand in the first quarter, demand will start to improve. So I really think prices need to go down into the first quarter. I'm suggesting that livestock producers button up their price protection on their heads of cattle that need to come to the market through the first quarter. But I certainly would feel that the back half of 23, I want to keep my top side open in livestock. I think the upside, think of this through, China's going through a chaotic reopening. They just decided all of a sudden, overnight, out of the blue, that just all restrictions are gone without having any medications or vaccines or anything. They just throwing caution to the wind and letting it rip. Now, we know as fast as Omicron type of virus spreads, this will be over very quickly for them. It'll be ugly, it'll be chaotic, but it'll be over very quickly for them. And by the time you get to the springtime, enough people will have the herd immunity, enough pills and vaccines will be in place, and then they're going to rip. China's going to rip to the upside. They're back into, now that Xi is president for life, or whatever you want to call him for life, they're back to juicing this economy, because without a strong economy, they can't be the superpower they want to be. So from second quarter onward, Chinese demand is going to start to rip aggressively, I think. And that means the demand for meat proteins is going to rip at a time that there's no animals. So you could see that we have a pretty exciting situation setting up for the back half of the year. But in the short run, that's out there. That's not the next 3 or 4 months. And so I'm worried about a knockdown, a pretty good knockdown here in the livestock sector. So, be careful about the short term, make sure you manage your risks, but, be excited about the long-term picture here.
Right on. Okay. When you're looking at, and I'm going to talk about this just because of what's going on in my neck of the woods here. So we've got sugar beet harvest came through, and I think it's pretty well safe to say that everywhere that grew sugar beets, it was not the biggest crop on the planet. And if you look at sugar production right now, the tons weren't there, and oddly enough, the sugar wasn't there as they thought it would be on our sugar beet harvest. So when you look at the sugar market right now, Shawn, what are your thoughts there, and what are some of your insights?
This issue for me is that, Europe had a disaster. They had that terrible drought, and they really rely on sugar beet production for sugar for the local, for their domestic demand. And it's a disaster. I mean, if look, the numbers come out of France are complete disaster. So there's a major shortage of sugar in Europe. As you said, we're not seeing snow drifts of sugar here either. And if we're heading into an El Nino year, that means hot, dry for India, hot, dry for Thailand, hot, dry for areas that they grow a lot of sugar. So the prospect here for sure looks pretty good to me, in terms of having, a pretty tight supply environment and a weather pattern that should be, pretty pretty negative here once we get into the spring onward. When we get into the next growing season in Asia, it should support negative production prospects. And so sugar's gone sideways now for almost 2 years, kind of been trading between, like, say, 18 cents or 20 cents here, back and forth. It hasn't done a whole lot, but the bigger the base, the bigger the move when it breaks out. I'm thinking the first half of 23 could be a period when the sugar market breaks out of this long base and maybe starts to express this tightness, especially if we get some weather issues coming in from an El Nino pattern kicking in. That to me is a market that has been a sleeper, but might wake up and outperform here in 23 versus other markets that may not be very exciting. So,
right on. Okay, well, good stuff as usual. Good stuff as usual, Shawn. Wow, it really came out well. If folks reach out to you and get more information about what it is you're doing over at Hackett Financial, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. As always, lots of information on there that goes over what we do and how we do it, to see if this way we do things with our weather algorithm and our capital flows, might be of value to those in agriculture that listen to your show.
Absolutely awesome. Thanks for being on the podcast, man.
Thanks, Casey. Really appreciate it.
All right, I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the YouTube version of this, the video version of this, at the Moving Iron Podcast YouTube channel, which is the Moving Iron Podcast YouTube channel. So check that out. Everything Moving Iron related, go to MovingIronLLC.com, and you get all the information for anything you want right there. So with that, I'm Casey Seymour with Shawn Hackett. It's gonna be smart, folks. Out.
Moving iron in the 21st century.